It wasn't terrible. The best thing that Target had going for it was the stock had really not performed well going into it. So that was that. The bar was low. Things seemed better, but the earnings were good. The guidance was not as good. Mm-hmm. It's not a crazy multiple, but the chasm between the Walmart multiple and the Target multiple is gigantic now. And so that's sort of when I first looked at it several years ago, that maybe that could close. They did seem optimistic. July was better. That last quarter wasn't great, but it wasn't terrible. Their inventories are improving. That was a gigantic issue last year. And so it wasn't terrible. They are hopeful for back to school all the way into September, they said. And I don't know if that's some Bed Bath & Beyond consumers that they could pick up. That would be good because those are a little bit better margin items. So wasn't terrible. I guess the street was looking for terrible. And I was kind of surprised, to be honest, the way the stock traded. If you think, all right, let's say they can make the midpoint of their guidance. It is, I don't know, 16, 17 in their multiple, which isn't terrible, but it's not super, super cheap.
I mean, it's 10 turns below what Walmart is valued at.
Yes.
I mean, that's staggering. So is that why the stock was up? That it just simply was too cheap.
Relief rally. I mean, I'm sure Steve and Tim have views on this. I was surprised when, if you had told me we play this game, what the numbers would be. I'm like, this stock's going to open lower for sure. It opened up $10. Yeah. Spent the rest of the day going lower. I think in my opinion, what the market took, inventories were down 17%. So they're like, okay, finally they're getting their inventories in check, which is a fine thing, except their product mix is still lousy. Now, valuation, yes, you can make a case and say, I'm willing to wait it out and Target will figure it out. But you've been able to say that for a long time. So I don't necessarily know if it's a read on the consumer as much as it is Target specific.
Yeah, I mean, I did Squawk Box this morning. And
I saw it.
One of the privileges of being on Squawk Box is to be able to talk to a lot of different people. On the back of the Target earnings. And so, to a couple of analysts, I said, let's say you put the pride issues to the side, and that's completely over. I mean, what should Target be worth? And they said, maybe 18 times. That's not far from where it is, right? I mean, it's 3 turns higher, Tim, because of the mix. The mix is still overwhelmingly a very negative issue for Target going into this sort of economy. What do you think?
But the mix will get better. And so I agree. If you take it at face value with a market that doesn't price stuff in, then you say Target's a company I don't want to own. We've known this about their merchandise and their product mix for the last 3 quarters. And the headlines, softening sales trends, decelerating discretionary. So you take a company that at 16 times $8 a share for next year, which is somewhere around consensus, which came down, by the way, today after they kind of tightened things up. And so you have a very clean inventory position. You have margin, I think, tailwind because of where you have lapped those full year margin headwinds from the inventory. Inventory shrink continues to be a problem. But really, what have you priced in with Target? I own Walmart. I don't own Target. Walmart's been a great stock to own, and it's not cheap. But I think you stay there. I think you can start to own Target here.
Just one thing I want to add. TJX Home Goods was a surprise beat. You would hope that you would see some of that same Home Goods kind of, higher margin stuff sell in Target. So that was a little disappointing that it wasn't a little bit better mix.
Yeah. Steve, what's your take? And at this point, does this stock reaction show that maybe Target just got too cheap and it's time to take a look? Maybe the worst is behind it?
Yeah. Yeah, I mean, let's not forget we had woke wars with Target. I think that will probably not be as long-lasting as many would have thought that would have been. And then when you compare it to Walmart, Walmart's revenues, 60% or over 60% come from groceries. Target, it's around 20%. So you really can't compare the two. I would still stay with Walmart, but it does really reflect a kitchen sink type element to it. Karen touched on it. You have back to school, then you have Christmas. So there's reasons to be bullish on Target where it is right now. The stock has not been above its 50-day in quite some time. Popped above it, now back below. But I think you could probably buy Target here.